selling at $4,296 an ounce. Going up some 30% last year, and now it's flying off the roof as well as silver. But again, only by the facts. Only by the facts. The mainstream media does not want you to know about this. Not a peep about it on their front page articles. Nothing. Zero. It only went up $90 today when we went on the air. $90. Nothing. Nothing. They don't want you to know how bad things are. We are in the wildest time of my lifetime, and we got a wildcat running the show.
In today's news recap, HSBC expects gold's bull wave to hit $5,000 per ounce in 2026. HSBC on Friday forecasts that gold's bull rally would drive prices as high as $5,000 an ounce in 2026, supported by elevated risks and the impact of new entrants into the market. Spot gold breached the 4,300 level on Thursday and was headed for its strongest week since December 2008. The advance has been fueled by geopolitical tensions, robust central bank buying, rising exchange-traded fund inflows, expectations of U.S. rate cuts, and tariff-related economic uncertainties. The bull market is likely to continue to press prices higher for 1H26, and we could very well reach a high of $5,000 per ounce sometime in 1H 2026, HSBC said in a research note. And yes, you guys, this is up to date and correct. Despite expecting higher prices, their gold price forecasts are significantly lower than current prices, as HSBC also raised its 2025 average gold price forecast to $3,455 per ounce from $3,355 previously. It increased its 2026 average gold price forecast to $4,600, up from its previous estimate of $3,950. HSBC said that given the sharp rise in prices during the second half of 2025 and heightened risks from new market entrants, it expects gold prices to remain elevated and potentially spike further through early 2026. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, hype the video, and check goldsilverstacks.com to get the Stacker's Handbook, the ultimate guide to trade the gold-silver ratio and stack efficiently without relying on market commentators. Link in the pinned comment. Let's get back into the episode.
So going back to the markets are still on when I came on the air, but they were closing down in about 10 minutes. And the Dow is down about 300 points. The S&P 0.8%, and the NASDAQ was down 0.7%. You ready? This is CNBC. Regional banks, Zions and Western Alliance, fell to their lows of the day as indexes rolled over. Zions plunged 13% after taking sizable charges because of bad loans to a couple of borrowers. Western Alliance dropped 11% after alleging a borrower had committed fraud. Go back to your Trends Journal. This is just the beginning. You're going to see the office building bust that's going to bring down regional banks. And then following the office building bust, the banks go bust. No one is talking about this other than the Trends Journal. This is just the beginning. Remember, let's go back to 2023. It's not ancient history. Silicon Valley Bank went bust. Remember that one? Oh, and then First Republic and Signature, and boom, down goes the markets and up goes gold. Very important. And Bitcoin's taking a hit. It's down to about 108,000, down some 3% today. Again, gold's bringing the prices down. People are looking for the safe haven assets. We got to see where this is going to go. We've been very bullish on Bitcoin, as you know. We got to see what the Trump team does to pump it up. And Brent crude down over 1% selling at $61 a barrel. It's selling at this low level. Last year it was selling around average $80 a barrel because the global economy is in slowdown. More supply than demand. And what else we got here? China's consumers' prices fall as deflationary pressures persist. This is from today's Financial Times. And they go on to say that consumers have been reluctant to spend. IMF urges U.S. to deal with huge deficits sooner rather than later. Okay. This is why gold prices are going up. The deficit is undealable. Again, I tell the story about my father, may he rest in peace, telling me about my grandfather, may he rest in peace, 1933. He's dating my mother, may she rest in peace. And he said, I went over to your grandfather's house and he was wrapping up all those gold coins. I said, what are you doing? He said, the president wants us to return the gold to the country and I'm a good American. My father said, what are you crazy? Don't do it. He said, your grandfather started cursing at me at the time. Turned over all his gold. That was 1933. They got married in 1934. No, 1934? The Gold Reserve Act. After they stole the gold from the people of the United States for $20 and about 62 cents an ounce, they raised the price 70% to $35 an ounce. Going back to the U.S. debt, there is a strong probability that the United States will jack up the price of gold. Trump said he's going to go into Fort Knox to see what gold. He knows what's in there. And they're going to tell the story that we got more gold than anybody else in the world. And now gold is worth $10,000 an ounce. And because we got all this gold, we don't have a debt problem. Something like that can happen. And again, gold price, I never thought gold prices would go up this high, this fast. Did not think it. So with every spike, there's a decline. So you could see gold prices lose $200 easily. Yeah, it just jacked up so fast. And so we got to see what will happen. It could lose $1,000. You know, there's no question about it. I don't think 1,000, maybe 500. If it does, you know, again, the world's buying it up because they see how bad things are.
In today's news recap, gold soars to record $4,288 on COMEX as U.S.-China trade tensions escalate. Gold prices on the COMEX futures exchange have shattered previous records today, surging to an unprecedented $4,288 per ounce. This historic rally is primarily fueled by a dramatic escalation in trade tensions between the United States and China, prompting a widespread flight to safe haven assets among investors grappling with heightened global uncertainty. The immediate aftermath has seen a significant shift towards risk-off sentiment across financial markets, with analysts now recalibrating their price targets for the precious metal, many forecasting further gains. The record-breaking ascent of gold underscores the profound impact of geopolitical instability on financial markets. As the world's two largest economies engage in a renewed and intensifying trade confrontation, investors are increasingly seeking the perceived security of gold. This surge marks a significant milestone in gold's sustained rally throughout 2025, reflecting a year of robust institutional demand, central bank accumulation, and substantial inflows into exchange-traded funds, all indicative of a market bracing for prolonged uncertainty. The immediate catalyst for gold's spectacular rise to $4,288 per ounce on COMEX today is the rapidly deteriorating relationship between the United States and China. What began as intermittent trade disputes has snowballed into a major economic and diplomatic confrontation, with both nations implementing and threatening severe retaliatory measures. This intensification has created a palpable sense of unease across global markets, driving investors en masse to traditional safe havens. Now, smash the subscribe button and turn on notifications so you do not miss out our daily recaps. And go to goldsilverstacks.com to get the Numismatics Handbook, the perfect guide for stackers who want to get active trading gold and silver coins instead of selling their gold and silver bullions for fiat. Enjoy the episode.
Deflation and their oversupply. Oversupply. But they don't say that. Factory activity also contracted for the past 6 months, the longest decline in 6 years. Yep, 6 years. Yep, since they started the COVID war. Chinese rare earth export curves threaten global supply chain. This again from the Financial Times. Very important. And you know, Trump put 100% tariff on it, going back and forth. Taco Trump. Trump always chickens out. We got to see where this is going to go. Very serious. Very serious. We wrote about it in detail in your Trends Journal. Trump enacts new tariffs on foreign wood products. Okay, do whatever you want. U.S. economy outlook lifted, this is Financial Times, as AI boom averts sharp slowdown. They're relying on AI to pump up the economy. They're overinvesting in it. There's going to be a dot-com bust. And they're just starting to talk about it now. Yep. Tech stocks have surged this year, carrying U.S. equity markets to a series of highs despite simmering concerns about what some companies will see a return of their vast outlays. Yeah, and the facts are most companies aren't seeing a return. They're losing dough. But important, AI, love it, hate it. It's the future, and it's where the world's going. An article in today's Wall Street Journal. Walmart forges deal with OpenAI to allow shopping with ChatGPT. It's the future. It's the future. And Google plans to invest $15 billion on an India hub, the first artificial intelligence presence in the country from Google. We're mentioning this because China and India are going to lead the world in AI. Each got 1.4 billion people. They're not dumb people. You put more brains together to make something happen, it's going to happen. And that's what's going to bring the dot-com bust. China's going to be the world leader. India will be fighting close behind them. Financiers sound alarm on standards after collapse expose riskier lending. Again, we just talked about one, and then the First Brands Group and Tricolor Holdings, Apollo Global Management, said the unraveling of the two businesses followed years in which lenders had sought out riskier borrowers. Again, every week in the Trends Journal, we show the bigs are getting bigger, the borrowing scams keep going on, and there's going to be a crash, and it's coming. Yeah, IMF warns of a $4.5 trillion private credit risk. It's going to happen. And this is why gold's going up and why they're not saying a peep.
What do you think of Celente's take? Do you believe gold will continue going up with Bitcoin, or is this just a mega trap for late buyers? Post in the comments section down below your honest opinion. Subscribe if you have not yet done so, and watch this video right here because it's a perfect fit for you. I'll see you on the other side.